Hey guys, Dennis Wilson, the Active Trend Trader. Welcome to today's session of Trade Your Way to Wealth. Video will get going here in just a second. The question I have for you today is, does indecision negatively impact your trading? Indecision can keep you out of trades so that you miss opportunities. Indecisions can keep you in trades where you should have already been long gone and the losses are starting to pile up. So if you don't know what to do with indecision and how to solve it, this video is for you. But first, before we get going, up in that corner there will be a drop down that talks about the AutoPilot Trading service, which is another really great way to get rid of indecision in your trading. So let's go ahead and jump into today's session right now. Okay, good afternoon, everybody. This is Dennis Wilson, the Active Trend Trader. I want to welcome you all to today's session of the Trade Your Way to Wealth and Financial Freedom. A couple of questions I'm going to leave you with. One is this a tradable rally? And regardless of what we think, we'll find out about it a little bit later, whether or not it is or not. Because so many times in the market, what you do is you find out things after the fact. And so after the fact is one of those situations where I'm sitting here, how can I? Anyway, we find out after the fact, basically, is whether or not is a tradable rally or not. I was speaking briefly with Steve as we were waiting for folks to come on. And when the market is doing what it's doing, can be really high pressure on indecision. You're sitting there going, what do I do? What do I do? What do I do? Well, you trade your rules, and hopefully they are written rules, because if your rules aren't written, they're kind of like, it's like the 10 Commandments. You know, the 10 Commandments were written down, so they're commandments. You do these things. They're not 10 suggestions. If your rules aren't written down, it's only a suggestion of what you're going to try to do. Write your rules down and learn them, memorize them. So I want to welcome Steve Farrar here from Honolulu, and then also Anil Parikh from Delaware. Gentlemen, welcome.
Thank you. Good to be here.
And so, if you joined the Bay Area Moneymakers, you had a treat, because Lee Tanner just presented on Tuesday night, and that. If you want to get the link to that video, you need to become a Bay Area Moneymaker member. That is free. And then send me an email to say, hey, Dennis, send me the email with the link password so I can watch. Lee did a great job talking about trading on margin, the two-edged sword of margin. Those who attended said it was just phenomenal. And so it was a great training session. I want to remind you that all materials which we present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And here's where I'm sitting. I had to take a little bit of well, it's not really a dip. I'm just kind of, this past week has just basically been nothing. So it's almost equal with where we were at the end of the month. So here's where we were last week. And here's where we were this week. So we're down like less than a percentage, but we're still beating the S&P by 29%. The NASDAQ and the Russell are still in bear markets. The S&P is getting a little bit of a rally today. And so does that mean, that you jump on board? We'll take a look at that, because in reality, there we go. In reality, the S&P came really close to hitting the bear market place, but this rally is very suspect. It's suspect because of the volume. It's suspect because of the just where it is at in the downtrend, and we'll go over that here briefly when we start looking at the charts. We've got some good stocks to take a look at. However, at the same time, do you really want to be trading? and we'll address that. And then also take a look at this weekend as you're chatting it up and looking at and doing your sessions, your analysis. Take a look at stocks like PayPal, Netflix. These are stocks that will probably, mark my words, never come back to be leaders like they were in the past. And so if your watch list is full of stocks like Netflix, PayPal, that type of thing, just start cleansing your list. Did you know that for Netflix to get back to its past high, it has to gain over 300%, even though it's only down 75% or something like that, but it's got to gain a bunch to get back up to where it was previously. So let's go ahead and take a look at the indexes really quickly, and we'll run a little bit faster here. The S&P, really interesting price action on the S&P. And the price action, as you see, what happened this morning? We had a gap. We had a go. But where did it go to? Right up to the 8-day moving average. And now it's selling off, stalling out at the 8-day moving average. That is not a sign of strength. That's a sign of basically weakness. And if you are joining us over on the YouTube channel, I am monitoring the chat. So if you do have any questions or anything like that, if you are over there, please just type them in. I'm watching it on my mobile phone, and we'll see if I'm trying to capture that so that if you do join us just on YouTube, you also get your questions addressed. And if you're over there on YouTube, just type in the chat box, "Hello, I'm here." I really appreciate that. That way I know somebody is there. So S&P, again, downtrend. It would not surprise me to see us bounce back up and go up here and test this downtrend line, but we may not get any higher than the 5-day, 8-day moving average. Look for a retest next week down into the body of yesterday's candlestick. On the weekly chart, let's see if we get a hammer, and I'll show you something that's very interesting. Is we have painted a new low here on the weekly chart. And let me grab. There we go. We painted a new low on the weekly chart. That is a level of support that really wasn't, let me extend that back to the left. As you can see, there is a level of congestion over here, but this is a zone of support. It goes down to about 372. So somewhere in that area, not surprising to find that we're getting some support to bounce higher. Again, until we take out and get a close above the 8-day moving average, any rally attempt is suspect. Qs. Almost identical. Gap up from yesterday's reversal candle. So we had a rally attempt yesterday. We get a gap up, hit the 8, and are then moving back down. I find it interesting that the Qs are very much respecting not only the moving averages, but also the Fibonacci's. Again, on the weekly chart, we're getting an excellent hammer, which could be indicative of a reversal signal on for the Qs. Russell, IWM. So very similar. We came down, tested almost down to the low of the 168.34. We got down to, as you can see, 168.90 gap, and gap and go, but we hit the 8 and are selling off. Now, if price action basically just hammers around and jiggles around here between where it's at right now and the low from yesterday, that may be a consolidation that we bounce higher from. We have to remember that this gap up, that whole gap on the Russell and also on the S&P and the NASDAQ reflect a level of support, and we'll see if it holds. I like, again, just get yourself and draw some trend lines here. I think a healthier level where this could break down from would be this trend line, and it may be tracking right with the 20-day moving average. So I'm looking for opportunities to basically short this market, not necessarily opportunities to go long this market. What do I need to go long this market is a retest towards yesterday's low and a hold of yesterday's low and a bounce up from there. So Steve and Neil, that's what I've got. What are your thoughts?
I pretty much agree with you. I think as we flush the new lows, it came on good volume over many days. We're not likely to have a strong bounce of high volume lows, and very likely we trade back down to test those lows or even go lower. But all that remains to be seen. And until we get a really good retest of the lows, I have no interest in being long this market. Like you, on a bounce up, I'd be looking at individuals to probably short. But I don't see candidates right now setting up precisely for a short, not in the next day or two, I don't think.
Okay. And Neil? Neil?
Manil is muted.
Yeah, I was muted. Sorry. Yeah, give us a couple of days and market will tell us. Right now, it's a suspect.
Okay, excellent. So, yeah, it's one of those situations where it's almost like it's too late to go short, but too early to go long.
Yeah.
Is that a fair statement? Okay. Now, folks, if you have any questions that you want us to answer, you can just put them in the chat box and make that accessible to everybody, put them for everyone to see. That way it gets recorded. But again, I pay attention to the chat box, not so much the question and answer. And of course, if you're watching over there on YouTube, just drop a comment down in the chat box also. And so what I'm going to be at. Yeah, Troy, you're absolutely right. Troy makes the comment that it seems like the downtrend has been too orderly, no big shakeout, violence. What might volume say in regard to, go short or go long? You're absolutely right. One of the things that we started to get a little bit of this past week on the, let me go back over here to the S&P. S&P. We started to get some larger range daily candles, and they were all pushing things down really hard, some gap downs and run-ups. Acting more like a bear market where you would, open up here, but we'd close down here. But you're absolutely right. Capitulation, it's just not there yet, as Steve said in the comments. So excellent. Well, let's see what stocks are on our radar. Now Steve basically said, hey, I don't have anything on my radar that he wants to talk about today. However, Anil does have CVX. Tell us about CVX.
Yes.
Well, darn it. Let me get the chart back up. There we go. Okay.
CVX showed up on my screen this morning. It has accumulation and distribution of 1.5 and or better, and I'm sorry, the up-down volume ratio is 1.5 or better, and then accumulation distribution C+, and MarketSmith indicates accumulation in the base with their blue dot. So that's my stock of the week.
Okay. Excellent. Do you have a backup stock of the week?
No.
Okay. So CVX. I like CVX, and depending on what kind of system you're trading, is now, have you already entered this, Anil?
No, I have not entered it. I probably will enter it later on today.
Okay, to give you an idea of where, okay, So he's about 5%. If he uses this low right here as your stop, you're about 5% away from that. But the positive sides are what? Everything is above all the moving averages, and we've broken back up above the 8-day moving average. And so it's very positive for moving on up. This is I won't call it a slow mover, but it is, it's a measured mover. Like there's 12% over a 10-day period. Not bad, but it's acting, it is acting like an oil type stock. So that's excellent. And this is Chevron. Another one of Chevron's ilk is also COP. Also something, very similar in how it's moving up. This is ConocoPhillips. And so here's my stocks for the week, guys. I like tallow. Now, this is earlier today. I like tallow. I like tallow if I get a close above the 8. If we fail to close above the 8, I would not take a trade in this. And so the 8-day moving average is where? The 8-day moving average is at 1839. So it's slightly above that right now. So 1839. I've got my momentum shifting both on the daily TSI and the daily market forecast. It's in the process of a large, kind of a cup, a weird kind of cup and a pullback and then a push higher. So again, it may be a better buy at the 50, and I would plug in there an alert about the 50, about 1725 to 1730 for a potential pullback into there. And I would alert and then make my decision on whether or not I wanted to trade this. Because right now, as you can see, we get a breakout on, in reality, really crappy volume. So tallow, that's one of them. The thing that makes this positive, though, is it is in a good uptrend and pushing to new highs, breaking out. And it's above the moving averages, which is very positive, unlike some of the indexes that we're looking at. The other one is DAR. So this has been on our list previously. It came down, tested at the $70 level, and is rebounding back up from there. But it's got some pretty significant resistance to get through at about 77. And again, earlier today, we had a breakout. I would not buy it where it's at per se, because we're right at a level of past of resistance formed by the moving averages. But I do like it, maybe down closer to the 8-day moving average. But if it closes below the 8-day moving average or below the 50 in this case, or the 200, I'd want to get the heck out of Dodge. So from where I would buy it to the 200 is about 2.5%, 3%. And so that's my stock for this week. What do you guys think?
Volume is very low on DAR today.
Yeah.
Very suspect breakout.
Yep. And so these could be definitely going some breakout fake outs. And so, guys, we have a chance to look at two stocks that you may want us to look at. If you will just type in the ticker and we'll take a look at them.
Dennis, both of your stocks, the weekly triple screen signal is still not broken, so which is interesting.
Yeah, what do you mean it's still not? I mean it's still in a buy?
That's right.
Oh, okay. Mark wants to take a look at SQQQ. So, yeah, Mark, on SQQQ, on the weekly chart, if you look over here, we're getting a shooting star, okay? That is a reversal signal. Now, we could be pulling back, it could be dropping down from there. And then what we have to look at on the flip side of that is if we're getting a shooting star on the weekly, what's TQQ doing? Again, shootings, this time we have a hammer going on. And so where might it go if it breaks and rallies? Again, look for it to move back up into maybe the 34 or the 50 or maybe even the 20-day moving average. But right now, we're in a downtrend. And so SQQQ, where would I want to buy SQQ? SQQ is going to have to prove itself. Excuse me. And I again, it's close, but as you can see, all the momentums, it looks like it wants to shift to the downside. Lilly has been a pain in my side, a thorn in my side, because it keeps breaking above the 8 and falling, break above the 8 and fall, and so it's just puttering along. We've got this downtrend line. Let's see if it breaks above that, and it could, or we could, look. If I was going to trade Lilly, I'd want to trade Lilly basically off the 50-day moving average now. Facebook is another one of those stocks that has probably seen its better days. In other words, it was once a leader, now it is a lagger, and will probably never regain its potential of being a leader again. If you look here,
what's that? Never say never. Never say never.
Hey, I am just repeating.
I hear you. I
hear
you.
What Bill O'Neill says. How far is it down from its past highs?
Yeah,
56%.
Now, it'll be a while.
Okay, it may take a while, but at the same time, things go down faster than they go up. Absolutely. So I'm not saying that it's a bad company. I'm not saying that that it'll never come back. But what I am saying is that it's got a heck of a lot of work to get back up to there. It has to gain 128%. 128.
Only 120. Only 120.
Only 120. And Bill O'Neill in his book talks about stocks that drop from their highs 50% to 75%, typically never regain the luster they had when they were, in their prime as growth stocks. Because I'll show you, as long as we're here, let's take a look at this. Netflix.
Sure.
Okay, this you can still look at Netflix and say, it's a buy, because it's got a hammer on the weekly chart. It's looking pretty good. But it's in such a huge downtrend. What about Netflix? Remember, in November of this past year, Netflix was up at $700. And it is now, how far down? It has dropped 76%. Now, this is also a lesson here on keeping your stops. To regain it, to get back to the high, 328%. To regain that is something that, that's a lot of work. But Netflix, again, I think Netflix is going the way of Blockbuster, personally. That is an opinion. That is not, but I think that there are so many other streaming opportunities out there. And so Mark says Facebook. So let's just run through the rest of them. We've got Tesla. Tesla's rallying a little bit, but Tesla's also, it's holding up better than the rest of the market, but it's still down quite a bit. But Tesla is a volatile puppy. Microsoft looking, again, Microsoft, these are not growth stocks anymore, guys. Look how far down it is. And it's not the same level of drop. Now, I'm not saying that, of course, it's not a bad company. Microsoft's going to be around for probably ever. NVDA, again, get a nice hammer on the weekly chart. But what's it doing? Similar thing to what the rest of the market's doing. Okay, it's one of that 75% of the stocks that follow the rest of the market. Came right up to the 8-day moving average, failing. I would look for a move up, maybe a little bit higher between the 20 and the 8, and look for a stall, and then look to get on this to the downside. Okay, guys, that basically is it. We covered more than the stocks we were looking at. Now we're almost running out of time. Steve and Neil, thank you so much.
Thank you. Interesting market.
And so, hey, I want to cover a couple of things. Just use written rules that are I am a very big proponent of written rules. One, based on back testing. And if you don't know how to back test, there's a lot of good things over on Investopedia that shows you how to back test. And some of the back testing that we've done is simply you go and you go back in time on the chart and then start putting the prices as you move on the entity. I like to back test my systems utilizing the S&P and or the NASDAQ primarily, because you get so much data to go back and look at, and it's not as impacted by things like earnings, that kind of stuff. Validate your back testing with live testing, and you want to use written rules that are proven to provide an edge. In other words, you know that you have an edge of greater than 60% or greater of winning trades, and then are clear and simple to apply, explainable to a trading novice. So that's one of the biggest challenges. If you can explain your rules and have somebody be able to trade your rules with your explanation, then they're simple enough for anybody to follow, and they're easier to memorize. So review your written rules until they are memorized, and then go back and review them at least once a month or maybe once a quarter, just to make sure you are not, violating your rules. That is, I think, the biggest reason people lose money in the market is simply because, one, they either don't have written rules, and or if they have written rules, they violate their written rules. Hey, if you struggle with how to trade for wealth and financial freedom, check out AutoPilot Trading. There's the link, and there's a QR code for how to get in touch with that. If you want to have more information about that, just email me. And we do offer some discounts if you are a veteran or if you are a member of the Bay Area Moneymakers. So Steve and Anil, thank you so much, my friends.
Great to be here.
Thank you.
We will look forward to seeing if this rally attempt holds. And if it does, great. If it doesn't, we will maintain our protection to the downside. Again, if you're joining us over on YouTube, thank you so much. And if you're joining us on YouTube, please leave a comment down in the comment section, even if you're watching the recording. And the comment I want you to leave is rally, to see if just rally by itself. One single word comment. So aloha. God bless everybody.